So in this question, you are required to do the statement of financial position. But now, what was tricky about this question? You were given a pre-adjustment trial balance. What is a pre-adjustment trial balance? It's a trial balance before adjustment have been taken into account. So if you see information on the income statement and information on the statement of financial position, it's almost the same because you'll have adjustments on the statement of comprehensive income. You'll also have adjustment in the statement of financial position. Okay. So this is a keyword, pre-adjustment trial balance. If you see this word, then you should expect what? Adjustments. Now, in today's lesson, I'd like us to discuss these adjustments in more specific details. Okay. Now, number one says, according to the physical stock taking done on the 29th of February, 2020, trading inventory on hand amounted to 68,000. Now, what should you do with this information and which section is more relevant when doing the statement of financial position? Okay, so this is the value of the trading stock that we call the net realizable value. Okay, so when doing the statement of financial position, we disclose the value of assets as per the net realizable value. So this is the value of the trading stock that was determined using the physical stock taking. Okay, so I'm going to say here, this amount will be disclosed as inventory under current assets. Okay. Number two, consumable stores unused according to the stock taking amounted to 200 on the 29th of February, 2020. Now, what are consumable stores and what is the correct procedure to disclose the consumable stores on the statement of financial position? Now, these are items that are used by the business on daily basis, such as stationery, office supplies, packing material, cleaning material. Now, if consumable stores are not fully utilized, we convert them into inventory when doing the statement of financial position, meaning that these 200 rands should be added on the inventory under current assets. Okay. The amount of 200 will be added on the inventory. Now, under inventory, what should be the total amount? It should be 68,200. You have 68,000 from the trading stock. You have 200 from the consumable stores on hand. Okay. Now, I just want to pause and allow students to ask questions. You can unmute yourselves. Okay, this is the paper we are dealing with. Okay. Okay, so far so good. Let's look at number 3. No entry has been made for commission of 10% but not received on 500 items that were sold for 60 rands each. Okay, so if we analyze this transaction, we can clearly state that there's a commission income that is involved, but now information says it was earned but not received. It was earned but not received. What comes to your mind? Accrued income. What is accrued income? Income that has not yet been received. Now, how do I work out my commission earned in this transaction? Okay, so 500 items were sold at how much? 60 rands each. So if you say 500 times 60, you'd get 30,000. Now, there should be a commission of 10%. So it should be 30,000 multiplied by 10%. I think it's 3,000 if I'm not mistaken. In which section are we going to record these 3,000? First of all, we need to define commission income. Sorry, accrued income. We said that this commission income is outstanding. Now it should be classified as an accrued income. What type of account is accrued income? It's an asset. It's a current asset. So this accrued income will be disclosed under current assets. Okay, on the trade and other receivables. Okay. Accrued income under trade and other receivables. Okay. If you have a question, you can just type. All right. Number 4, received a check for 600 from an insolvent debtor, J. Marsh, who was only able to pay 30% of a debt. Now, the balance of account must be written off, and the information says no entries were made for these transactions. Okay. Received a check for 600 from an insolvent debtor. Now, this 600, it represents 30% of the total debt. Okay, I think there's a question. Will the recording? Yes, the recording will be sent on the group. Okay. Now, we have 2 accounts that are involved in this transaction, because if you look at the last information, it says that no entries were made for these transactions. Received a check for 600 from a debtor who was unable to settle the full debt. Now, this 600, it represents 30% of the total amount he owed. Okay, so now we need to work out the bad debt, the amount that needs to be written off as irrecoverable. Now, this is what I'm going to say. 600 multiply by what I want over what I have. I want the amount that should be written off as irrecoverable. And it's 70%. Why 70%? If someone was able to pay you 30% of the full debt, that means 70% should be written off as irrecoverable. You're going to suffer a loss of 70%. Okay, what is it that I have? I have the amount paid and it's 30%. Okay, so it should be 600 multiplied by, what is it that I want? I want 70. What is it that I have? I have 30. Okay, so 600 multiply 70 divide 30, it should be 1.4. Now we can clearly work out how much was the full debt by adding 600 and 1.4. Okay. Now 1.4 should be written off as a recoverable. When doing the statement of financial position, okay, I think there's a question. Okay, now please text me on this number so that I can add you on the group. 672. All right, a recording will be sent on the group. Okay, so the bad debts should be excluded from the debtors control because we won't be able to receive 1.4. Now, what will be the net trade debtors? It should be the amount that excludes the debt, the bad debt. Okay, I think there's another information. Okay. Okay, another message. All right, guys, please text me on the 076 729 7208 number. Okay, then I'll add you on the group. All right. So now 1.4 will be excluded from debtors control. Now let's look at the amount for debtors control. You are given the debtors control as 32,000, but there's 1.4 that will not be collected. Okay, so it should be 32,000 minus 1.4 on the statement of financial position under trade and other receivables. Okay, now I just want to pause and allow students to ask questions. Okay, I saw messages. The first one, so the 600 will be added to the bank. Okay, let's discuss the 600. We are done with 1.4. Let me check. Okay. Now, with regards to 600, it says received a check. So if we received money, okay, why trades and other receivables instead of trade and payables? Okay. So let me first explain the 600, then I'll answer your question. If we have received the payment, that payment needs to go straight to the bank. So this 600, yes, Sianda, 600 will be added to the bank under cash and cash equivalents. Under cash and cash equivalents. Okay, and then another question is, why on trade receivables and not trade payables? Okay, as we trade, as we sell, we are expecting to receive something in return. So trade receivables, in other words, sell and receive. So we sold goods to this debtor, and now this debtor is unable to pay. So this should expect the summary of debtor's transaction. What is a summary of debtor's transactions? Is the trade receivables. Now, if you look at the items that goes under trade receivables, they are almost the same. Now, we said accrued income should be recorded under trade receivables because why? This income needs to be received by who? By the business. Now, with debtors control, with the bad debts, this amount should have been received by who? By the business. So it's more like the transactions of the debtors. It's more like a summary of the debtors' transactions. Money that needs to be received by the business, money that is owed to the business should be disclosed under trade and other receivables. But now this 1.4 will be excluded because the business will not be able to collect from this debtor who became insolvent. I hope you are answered. And Drain, I hope you are answered. Oh, cause it's a loss. Yes, it's a loss. If you have 5 people that owe you and one from the 5 is unable to pay, what will happen to the amount that you expected to receive? It will definitely decrease. Now we have 32,000. Let's look at the amount of debtors control. We have 32,000. We have 32,000 that we expect from debtors, and 1.4 will not be collected. And also the 600 should be excluded. Why? Because a debtor managed to pay. Okay, so let's do like this. 600 should also be excluded since it's a payment from a debtor. Now, if we apply the double entry system, you'll realize that with the first transaction of 600, we're going to debit bank and credit the debtor's control. Debit bank, we have received money of 600 rands from someone who owed us. Now, we're going to exclude that money because the person managed to pay. Okay, let me check. Okay, someone says I should repeat number 4. Okay, would we have excluded 2,000 from debtors control if they have asked us to write off the account instead of saying to write off the balance? Yes, that's correct. That's correct. Okay. Okay, there's a request that says I should repeat number 4. Okay, let me repeat number 4. Now, with number 4, it says received a check for 600 from an insolvent debtor, J. Marsh, who was only able to pay 30% of her debt. The balance of her account must now be written off. No entries were made for these transactions. Now, the first thing that we did was to work out the amount that needs to be written off, the balance that needs to be written off as irrecoverable. Now, we made use of the want over have formula. What is want over have formula? This is the formula that helps you determine, that helps you work out what you want with what you have. Now, we said we want the amount that should be written off as irrecoverable, and it's 70%. How did we work out 70%? If Marsh was able to pay 30%, it means the balance is 70%. So That's the amount we're looking for. I have the amount paid and it's 30%. So 600 multiply 70 divide 30, it's 1.4. So in total, Marsh owed 2,000. From the 2,000, she was able to pay 600. We need to write off 1.4 as a recoverable. Now, 1.4 will be excluded from the debtors control because we're not gonna receive this amount. It should be written off as a recoverable. It's a loss. 600 will be added to the bank account because of this information. No entries were made for these transactions. Now we need to take this check and deposit to the bank account. Hence why we're gonna add it under cash and cash equivalents. Again, this 600 should also be excluded since it's a payment from a debtor. Now, if we apply the double entry system, we're gonna say debit bank how much? 600. Credit debtors control. How much? 600. Okay. That's the first transaction. Receive the check for 600 from a debtor. We're going to debit the bank. Bank is an asset. Assets increase on the debit side. We're going to credit debtors control. Debtors control is an asset. Assets decrease on the credit side. So because this amount was paid off, we need to write it off from the amount that we are expecting from our debtors. Now, what's the other double entry system? With regards to the credit losses, the bad debts, we're going to debit bad debts of how much? 1.4, and then credit the debtors control. 1.4. So our equation balances. The way we treated this information is absolutely correct. Okay. Any question?
I think what I would like to see is how will you then be placing this on the balance sheet exactly? Because now, if you say you're going to be debiting the bad debt of 1,004 and creating the debit for another 1,004, how will that sit exactly? Where will you be adding? Where will you be subtracting?
Okay, that's a very good question. Okay, I'm going to try and create a statement of financial position here and show you how will this information be disclosed. Okay, say for example, this is our statement of financial position, assets section. So under current assets, you have trade receivables. Now, under trade receivables, how much are we given as debtors control? We are given 32,000 from the information. Now, we should exclude the 1.4 since we're not going to receive. We should also exclude the 600 since we have received this amount. If your debtors pay, are you going to add from the list of debtors or are you going to subtract? Definitely, you're going to subtract. Okay. Now, this is cash and cash equivalents. Cash and cash equivalents. Equivalents. Now, how much are we given as bank? Let's look at the bank. 182,000 rands. Okay. 182,000 rands plus 600 since it was received. I hope you are answered. Okay, you will receive a copy of this document, no problem.
Sorry.
Yes.
So that's how question the item number 4 should look like on a financial position.
Yes, on your statement of financial position.
Okay.
All right. More questions, students? If there are no further questions, allow me to continue. Okay, there's a message. Where do you record bad debts? Okay, now that you are doing the statement of financial position, you will be given two bad debts if there's a pre-adjustment trial balance. You will be given a bad debt on the trial balance. Okay, where's the bad debt here? Do we have a bad debt? Yes, we do have a bad debt of 5,000. You are given a bad debt of 5,000 and we have just worked out bad debt as 1.4. Between the two bad debts, which one should be excluded on the statement of financial position? The one that lies on the adjustment. So ignore the one on the trial balance of 5,000, make use of the one on the adjustment. So we won't use 5,000 here, but we'll have 1.4. Now the question is, where do we record bad debts? We record bad debts. We do not record, but we exclude them in the trade and other receivables. We exclude them from the trade and other receivables since this amount will not be received, since this amount should be written off as irrecoverable. Hope you are answered.
Hello, sir.
Hello.
Okay, can you please go back to the table because I see there's a bad debt recoverable. Can you please tell me what is that?
Okay.
There's a bad debt and bad debt recoverable.
Okay.
Recovered, yeah.
Okay.
Yes, of 2,000.
Now, what is bad debt? What is bad debt recovered? Bad debt, money gone bad. It's a debt that gone bad. We will not receive that amount because a debtor became insolvent or maybe a debtor ran away. All right. Now, what is a bad debt recovered? Say, for example, J Marsh, you see in this transaction, it says from an insolvent debtor. If someone is insolvent, it means that they're not financially stable. They cannot pay their debt. Okay, so say for example, in future, J Marsh becomes solvent. If she becomes solvent, she will be able to pay off this 1.4. Now, if she pays this 1.4, we will record it as bad debts recovered. We have recovered from the bad debt. We have written off J Marsh's debt as recovered, but now J Marsh won Lotto and is able to pay 1.4. We will record as bad debts recovered. Say, for example, your boyfriend or girlfriend misbehaves, you write them off as bad debts. And then they come back after 2 months with good behavior. What do we call them? Bad debts recovered. Okay. Why is bad debt not 606? We only receive 600. Okay, why is bad debts recovered not 600? Since we only received 600 from her, okay. We did not get the 1.4. Yes, we did not get the 1.4, hence why we're gonna record this 1.4 as bad debt. But we have only received 600 that needs to go to the bank. If Marsh comes back in future and settle this 1.4, then we will disclose this 1.4 as the bad debt recovered. I hope you are answered, Phil. More questions? Okay, so in this example, in this information, in this adjustment, we do not have a bad debt recovered. We only have a bad debt. All right. No, this 600 will not be recorded as the bad debt recovered. Now, I want to make an example of a bad debt recovered. Okay. Now, this is an example. I want students to understand the bad debts recovered and the bad debt. Okay. So this is an adjustment. Adjustment number 6.1 says J Marsh won lotto and was able to pay her account that was previously written off as irrecoverable. Okay, now I want to highlight a keyword that describes a bad debt recovered. Previously written off. Previously written off as irrecoverable. Now, if you see previously written off as irrecoverable, then you should know you have a bad debt recovered. But with this information, there is no bad debt recovered. We have in the recover the 1.4. We have written off this 1.4 as irrecoverable as a bad debt. Okay, now there's another question. Okay, let me start with Galaxy. 600 is a loss, money that the company won't be getting back. Okay, 600 is not a loss. 600 is what we have received as a payment. The information says received a check for 600. So that's the amount we have received. But what is a loss in that adjustment? 1.4. 1.4 is a loss. So what is the total amount? 2,000. From the 2,000, we have received only 600. Now 600 will be recorded under bank, but what should be written off as a recoverable? 1.4. Okay, let me go to the next question. How is it a loss if it's going into our bank account? 600 is not a loss, but 1.4 is a loss. 1.4 will be recorded as a bad debt. Okay, the next one. Okay, so does the 2,000 in the trial balance relate to other clients who paid? Does not relate to. Okay, where is the 2,000? Let me look for 2,000. Okay. Oh, the 2,000 for bad debts recovered. Yes, it does not relate to J Marsh. So it's other debtors we have recovered. It's other bad debts we have recovered from. Okay, let me check. I think there's another message. All right. From Galaxy, I meant to say 30% of 600. That is a loss. That is a loss, which is 1.4. 30% of, yes, 1.4 is a loss. And 1.4 is 70% in terms of the percentages. Galaxy, I hope you are answered. Where will you record a bad debt recovered? That's okay. A bad debt recovered will not be recorded in the statement of financial position. Now, bad debts recovered in terms of the elements, it satisfies, it fits into the criteria of income accounts. So do we disclose income accounts in the statement of financial position? No, we do not disclose income accounts. We only include assets, equity, liabilities. Okay, so bad debt recovered is a foreign item in the statement of financial position. More questions? Okay. All right. Let's look at the next.
Before you move,
Yes,
sorry.
yes, no problem.
That means transaction number 5 won't be included in a statement of financial position.
Okay, let me look at transaction number 5. The provision for bad debt must be decreased to 1.5. So if we are doing the statement of comprehensive income, the difference between the provision for bad debt that lies on the adjustment and the provision for bad debt given on the trial balance will be treated as an income. But now we are doing the statement of financial position. This is the actual amount that needs to be disclosed. The provision for bad debt must be decreased to 1.5. How much is the provision for bad debt given? It's 4,000. So the business estimated 4,000. That is unlikely to be collected from debtors. Okay. We have bad debt, debts gone bad. People who decided to run away, people who became insolvent. That's bad debt. We have bad debts recovered, people who became solvent and were able to pay their amount due. We have a provision for bad debt. What is a provision for bad debt? This is an estimation of money that is unlikely to be collected from debtors. Now that we have suffered from bad debt, we are leaving a space for disappointment. We are leaving a certain portion of money that might not be collected from debtors. If we have suffered a lot of bad debt, will you estimate a full payment from your debtors? No, you will estimate a certain portion that we call a provision for bad debt. So that portion is an estimation that might not be received from debtors. All right. Now we are doing the statement of financial position. Information says the provision for bad debt must be decreased to 1.5. You have provided 4,000. Now you need to provide how much? 1.5. So this provision for bad debt should be excluded in the amount of trade receivables. Okay. So in the trade receivables, you would say minus 1.5. Okay. If you are doing the statement of comprehensive income, the difference between 4,000 and 1.5 would be treated as income. But if you're doing the statement of financial position, whatever amount that needs to be provided as provision should be disclosed as provision for bad debt in the statement of financial position under trade and other receivables. Okay. 1.5. Yes, you can ask.
I just wanted to find out in the income statement for provision for bad debts adjustment, will we put 1,500 as the total, or will we say 4,000 minus 1,500?
Yes, 4,000 minus 1,500. And then that difference should be treated as an income. So what is the contra account? Provision for bad debt adjustment. All right.
When they say decrease to 1,500, and now when you say you must decrease by 1,500, aren't we minusing what, 2.5 in actual fact?
Okay.
From the
If we-
4,000,
Yes, I get
then
what
we
you're saying.
then we remaining with the 1,500.
Okay, all right. So this statement says to us, this is the actual amount that should have been provided. Now, this is the net, this is the actual amount that needs to be disclosed as the provision for bad debt on the statement of financial position. If you are doing the income statement, then you would work out the difference. SK was saying that we would say 4,000 minus 1.5. Then the difference would be an income on the statement of comprehensive income. But now you are doing the statement of financial position. The information says the provision needs to be adjusted to 1.5. Where else the provision for bad debts given is 4,000. So what is the actual amount? The business estimated 4,000. The adjustment says, no, you know what? So many people got their jobs back. So we're not expecting so many bad debts. Just make an estimation of 1.5. Okay. So please be careful, students. When doing the statement of comprehensive income, you work out the difference. But when doing the statement of financial position, focus on the amount that is provided on the adjustment. Now, this information simply tells us that the provision for bad debt should be 1.5. Now, we're going to say minus 1.5 under trade and other receivables. More questions?
I'm told, do we also have provision for bad debts under the current assets as well?
Yes. So this is the 1.5 of the provision for bad debt. So we exclude. Now, your trade receivables would be debtors minus the bad debts that lies on the adjustment, minus the payment from a debtor, minus the provision for bad debt. You can list them separately. You can say under trade receivables, I'd have debtors control. From debtors control, it should be 32,000 minus 1.4 minus 600. And then after, it should be provision for bad debt of 1.4. And then we have this commission that is outstanding of 3,000 accrued income. Okay, so let me do it like this. It should be debtors control, provision for bad debt, accrued income. So this is an accrued income of how much? 3,000. Provision for bad debt, always in brackets, 1.5. The net trade debtors, it should be 32,000 minus 1.4 of bad debt minus the payment we have received from the debtor. Okay. So this is how your trade receivables will look like. Okay, I think there's a message. Please repeat what you just said now. Okay. If it says increase, that means we add 1.5. If it says increase, that means we must add 1.5. Yes, that's correct. If the adjustment says increase your provision for bad debt by 1.5, then we'll add 1.5 to the 4,000 rands. Okay, so I don't know which part should I repeat. Please repeat what you just said. Toffee, which part? Okay. You can continue. I'll ask in the end. Okay, no problem. Number 6, the telephone account for February was due to be paid on 2nd of March 2020, and it's 700. The financial year ends on the 28th of February 2020. Now this 700 will be paid when? On the 2nd of March. Now, this 700 should be treated as what we call accrued expense. What is an accrued expense? Expense that is due, expense that is outstanding. Okay, so under current liabilities, under trade and other payables, we'll have 700 as accrued expense. Accrued expense under trade and other payables. So if an expense is outstanding, if an expense is due, it should be listed under trade and other payables. It should be classified as an accrued expense. Okay, more questions? Okay, let's call it a wrap for today, and we'll organize another free session. Please don't forget to text me on this number 0767297208. I'll add you on the group, then you'll get a copy of this paper and also the recording. Thank you very much.